You got a raise last year, then turned it down. Maybe not literally, but in your head, yeah. 67% of Americans fear moving into a higher tax bracket. They turn down raises, skip freelance gigs, avoid negotiations. All because of a myth, a total misunderstanding of how taxes work. Here's the real number: nobody pays their bracket rate, nobody. In this video, we're going through the actual math. Exact dollars, real bracket breakdown, what you actually owe. And why this myth straight up is costing you right now. Let's go. Okay, so here's the myth, the way most people think taxes work. Someone says I'm in the 22% bracket, so I pay 22% taxes. They picture the government taking 22 cents of every dollar they earn. And then someone offers them a raise, extra shift, freelance job. And their brain goes, wait, will this push me into 24%? Will I actually take home less? Is it even worth it? Reddit, TikTok, your uncle at Thanksgiving, full of this panic. This belief is so common it has a name: bracket creep anxiety. Economists study this, it changes actual behavior, real decisions. A Tax Foundation study found 1 in 3 workers considered refusing extra income. 1 in 3, man, that's not a personal finance quirk. That's a systemic failure of financial education, full stop. And here's where it gets really messed up: schools don't teach this. Only 17 states require a personal finance course to graduate high school. So you literally may never have been taught how this works. Not your fault, but it is your problem. Let's fix it. Alright, let's talk about what a tax bracket actually is. The US uses a marginal tax system. Marginal, remember that word. Think of it like a staircase: each step is a bracket, each has its own rate. You only pay the bracket rate on income inside that step. Not on everything, not retroactively, just that slice, that's it. Example: you earn $60,000, you're in the 22% bracket technically, but look. 13.8%, not 22, let that actually land. This is the real number, 13.8, not the bracket number, the effective rate. The marginal rate is your highest bracket, the effective rate is your real number. Most people confuse these two numbers their entire life. And every wrong decision they make, built on that confusion, straight up. Here's the full 2024 bracket table for single filers, screenshot this. Notice your first $11,600 is always taxed at 10%, always. Even a millionaire pays 10% on their first $11,600, same as you. Now here's where it gets interesting, let's do actual math. Person A makes $50,000 a year, they think they're in 22%. After standard deduction, $14,600, taxable income is $35,400. On $35,400 taxable income, here's what actually gets taken. 8% on a $50,000 salary, you thought it was 22%. Now what if they get a $5,000 raise, go to $55,000? That extra $5,000 lands entirely in the 12% bracket, not 22. Tax on the extra $5,000, $600, you keep $4,400, still a win. Bro, you cannot take home less by earning more, impossible. The system literally cannot work that way. Marginal means incremental. Now let's go bigger. Person B, $100,000 income. After standard deduction, taxable income $85,400, multiple brackets. 13.8% on 6 figures, still not 22, still not even close. Compare what people fear versus what actually happens every time. $8,000, that's the cost of not knowing how brackets work. Not in actual money lost, in fear of money that doesn't exist. Okay, pause, there's something I have to be straight with you about. Federal income tax isn't your only tax, not even close. There's FICA, Social Security, and Medicare. That's 7.65% flat on every dollar. This is automatic, comes out before you even see your paycheck. Then state income tax depends where you live, some states 0. 9 states have 0 income tax, Texas, Florida, Nevada among them. California hits 13.3% on top, New York close behind at 10.9%. Total real burden federal FICA state on $100K in California. Okay, 26% combined is real, that's not small, I get it. But the math still works the same, more income always more take home. Self-employed, now you're paying both sides of FICA, 15.3%. Employee pays 7.65%, self-employed pays 15.3%, that's the employer share. But you get to deduct half of SE tax, so it's not as brutal. This next part, this is the one that's gonna make you angry. The withholding system, your W-4 often takes too much, on purpose. $2,753 average refund, that's not a gift, you overpaid. They held your money 0 interest for 12 months, every year. Alright, let's talk about what you can actually do with this. 4 moves, concrete, real numbers, no vague financial advice here. Move 1, know your actual effective rate, not your bracket. Seriously, pull your last 1040, calculate this number right now. Most people have never done this, it changes everything instantly. Move 2, max your 401k, reduces taxable income dollar for dollar. You're not just saving for retirement, you're reducing taxable income now. Can't max it, even contributing enough to get the employer match helps. Move 3, fix your W-4 withholding, stop giving free loans to the IRS. $229 a month compounding, not sitting in the IRS for a year. That's $32K over 10 years, just from fixing your withholding. Move 4, if you have side income, learn Schedule C deductions. These are legal, these are IRS approved, not gray area, not tricks. The tax code literally rewards you for knowing how to use it. Quick decision framework, 2 questions for every tax decision. Gross income, interesting number, taxable income, the one that matters. And you have way more control over taxable income than you realize. Let's make this real, someone considering a side hustle, 20K extra. Old thinking, that'll push me into 24%, not worth the stress. New thinking, 20K extra at 24% marginal, tax $4,800, keep $15,200. $16,000 in your pocket, from a thing you thought wasn't worth it. Here's my final thought, this stuff being confusing, not an accident. Financially literate people ask harder questions, make better demands. The myth makes taxation feel more punishing than it is, on purpose. Makes the math feel impossible, it isn't, you just saw that. You're not bad with money, you had wrong information, that's different. Take the raise, do the freelance work, negotiate the salary, do it. None of that gets eaten by taxes, it gets partially reduced, rest is yours. Subscribe, next video, the withholding system and your tax refund myth. Your tax refund is not a bonus, it's an interest-free loan to the IRS.